Semiconductor stocks are on fire, and I wanted to look at SOXX Stock, which is an ETF for the semiconductor industry. Now, I've broken down, there's about 30 stocks in there in SOXX Stock, the ETF, and I want to show you that generally speaking, it's a little overvalued, little pricey, but there are some gems hiding inside there. Let's jump in and I'll break down SOXX. If you're just finding my channel for the first time, thanks so much for stopping by. This is a new channel for me. It's growing quite rapidly. What I do here, first and foremost, I'm an economist. I break down the economy and I look at individual stocks from a value investing standpoint. What I wanted to look at today, SOXX. It's an ETF, this stock. It's the semiconductor, the iShares semiconductor stock. And here's a daily chart on this. The most recent move, pushing from 560 up to 602, nearly 10% move. This one is actually being driven by SMCI Stock, who their latest information, their financial release, I think is in just a couple days here, but they've guided forward that they're seeing bigger revenue, bigger earnings based on revenue, and forward guidance is much higher before we get their actual financial earnings for the quarter. This is really what is driving a lot in the past couple of days, 2 or 3 days. But what I wanted to break down, here's a look. So SOXX Stock, the ETF, as you can see, unfortunately I cannot see. As you can see in this, there are 30 stocks here, and this breaks everything down. And what I did with this particular spreadsheet, and I do this with all of them, I only look at one share. I don't put any of the weighting in for any particular ETF. I just ask the question, over the course of the next 4 quarters, what are the projected earnings based on analyst expectations? And I take an average of that. Looking at, then I take a look at the current price, divide the future 4 quarters over the current price. That gets you yield all the way over onto the right. And as you can see, 3.48%. This pushed up a little bit higher over the past couple days. Some of these are significantly overvalued, but there's some gems in here. Check out SOXX stock. Check out ACLS stock. ON stock. These are companies that if you break down their future earnings, you take a look at their revenues quarter after quarter after quarter, moving forward, projected revenues continually increasing. As a value investor, one of the first things I ask is, what's the revenue picture? I'm looking for continually increasing revenue. I'm looking for continually increasing earnings. And then I can answer the question, what can I reasonably assume based on previous financial numbers from any particular company? If they're all over the place, then I can't reasonably assume anything. But if you see a company where quarter after quarter after quarter, their revenue continues to grow slightly higher every quarter, and the earnings do exactly the same, that's a company I'm going to be really interested in. Beyond that, then I take a look at this. I'm breaking down all 30 stocks inside SOXX stock. I asked, my targets are the ones at the very bottom. United Microelectronics Corporation, 7.91%, 7.81%. I start finding those undervalued stocks within an ETF that is slightly overvalued. Those are the gems in the rough that I'm looking for. And with the semiconductor industry, SOXX stock, as you can see, and with the previous charts, it's on fire right now because of all the AI circuit boards and everything that is really going to be driving the future of these companies. We've seen NVIDIA, of course, really lit up the board. NVIDIA itself, a little overvalued, and if you look, it's just right around 3%. Should that stock drop a little bit more, and it goes above 4%, that could be a good solid buying opportunity because NVIDIA is really growing quite rapidly, though the rate of growth is slowing down. And so that's what I'm really kind of breaking down when I look at these stocks. And so these stocks, and if you take a screenshot, you can see which ones I'm talking about. Rambus, that's another one. ST Microelectronics. These are companies that within this ETF, SOXX stock, they're undervalued. The overvalued ones, I probably wouldn't touch them. SOXX stock itself, slightly overvalued. Again, I wouldn't buy this because one of the things is when you look at the weighting itself, it's overvalued even more. But the individual stocks are what I like to break out. And when you actually take a look at some of these stocks and break them down, you see that there are sort of gems that the market is sort of overlooking simply because there are more popular stocks. But simply because any one stock is undervalued doesn't necessarily mean that the stock is eventually going to get there. Mr. Market will get it wrong from time to time, and sometimes Mr. Market keeps it wrong from time to time. At the same time, the economist in me, we could very well see a correction in the overall broader market if we start seeing economic data that comes in too hot and that forces the hand of the Federal Reserve, and the Federal Reserve has to raise interest rates. So make sure to break down those kind of, you need to look at the bigger picture, the economy first. Then you need to look at each individual sector. I actually believe that we're probably going to see an opportunity by the end of this year to buy on some dips with the stock market because I think it's a little too pricey right now, and I think the economy is a little too hot. But take a look at this this spreadsheet. Start picking those diamonds in the rough, because if they dip even further and they maintain their revenue growth and their future earnings per share, those are some value investments. Make sure to hit that like and follow button. I break down these kind of stocks for you. I'll show you these kinds of spreadsheets so you can kind of keep up with what's going on, which ones you should be looking for based on future earnings per share, given today's price, equating to yield, and of course the economy. We'll see you in the next video.